Hello, everyone. My name is Courtney Pollock, and I'm the Marketing Coordinator for SWK Technologies. I'd like to welcome you to our webinar, Easily Achieve Mandatory Compliance with Lease Accounting Software, presented by LeaseQuery. A little housekeeping before we get started. Everyone has been placed on mute to keep the background noise to a minimum. However, throughout the webinar, you can submit any questions you have. If you'd like to submit a question, look for the questions section in your GoToWebinar or in the chat box, and we will answer all your questions at the end of the presentation. We're also recording this webinar, and it will be distributed tomorrow to all attendees, as well as those who registered but were unable to attend. Also, we would appreciate your participation in our polling questions throughout the presentation and our closing survey. With that said, we appreciate you taking time out of your busy day to be with us today and attend this webinar. We're here to help you get the most out of your software solutions and help you find an easier way to run your business by providing you with tools, support, software, and industry knowledge whenever you need it. So whether you're here researching a new solution or you're just here to learn, we'd like to encourage you to ask any questions you have. And lastly, as a quick reminder, SWK is constantly sharing important updates and software tips and tricks on our social media channels. We encourage you to follow us on Twitter, LinkedIn, Facebook, and subscribe to our YouTube channel where we'll post our recorded webinars like this. With that said, I'm going to hand it over to Chandler and Wesley to get us started.
What's going on, everybody? My name is Chandler Watts, and I'm a channel partner manager here at LeaseQuery. I am responsible for the relationship between SWK and LeaseQuery, and that's something we are very, very thankful for. Well, we actually got to attend the SWK Empower event last week, so we might have seen a few of y'all there, and we plan to be at a few more events down the road. Just an example, the Acumatica user group and then the Empower West we plan on attending. So we are very thankful for this partnership. I actually have been lucky enough to work with SWK in a previous job too. So it's always nice to come back into the family and work with people who are super, super awesome, right? So just a quick overview of our agenda today. Obviously, I explained a little bit about our partnership. Wes is going to dive into the background on the new accounting requirements, and then we will hop into some of the complexities as well. A little bit about myself. I'm coming to you live from beautiful Charleston, South Carolina. If you haven't been, please come and visit, but maybe wait until August or September or something because it's crowded and hot. But I have been managing technology resellers since I graduated from college. As mentioned, I have worked with SWK in previous roles, and I actually was more on the distribution partner side prior to LeaseQuery, where I worked for Cisco for a little over 3 years. And as mentioned, I do have a little bit of background in Sage ISV integrations.
Awesome. Thanks so much, Chandler. So I'll go ahead and introduce myself. I'm Wesley Williams. I'm a technical accounting manager at LeaseQuery. A little bit of background, as you see on the screen. I got my master's from Kennesaw State here in Atlanta, Georgia. That's where LeaseQuery and myself are currently based. I'm a former KPMG auditor, so worked there straight out of school and had a great time, but also enjoyed not working till 2 a.m. So got the awesome experience to work with LeaseQuery. I actually worked with LeaseQuery during my time there at KPMG. A couple of my clients was actually using our tool, so got to audit it. So I got to see both sides. It's really kind of cool there. But yeah, I'll be the one walking us through the presentation today. So really looking forward to that. But just before we do, I do want to give you a little idea about who we are as a company. So a little bit about our story, right? You'll see George Aziz, our CEO and founder. He founded the company in 2011. So way back in 2011, he was working for a accounting group and started to see the need there, right? And it was actually under the old standard. ASC 40, there was just no need, and he was working in that technical research area, and so went out and said, hey, I'm gonna create this software. And great timing, right? These new standards came out. I think there was whispers back then of a new standard coming out, but now obviously we focused our tool for these new lease accounting standards, which we'll talk about today. But we're in a unique space in this area because we are founded from the accounting perspective, and so really our goal is to to help accountants, right? Our motto is by accountants for accountants, and so we really strive to make that an easy process. So over the past decade or so, we've grown just tremendously. You'll see here over 300 people now at our company, 2,000 customers just across the globe. But probably the thing we're most proud of is just our retention rate. And we work really, really hard and value, and value our customers to make sure that they don't want to leave us. And then also to on third-party review sites, we often get really, really, really well reviewed. And really, I think that goes to the quality of our software, but also the quality of our people, the quality, especially of our support, because we focus on, again, just making lives easier there, especially for accountants. So we have accounting support there. And so again, something we strive for often. Just to give you a little idea about how we rank in the marketplace, this is something we focus on often, but we have been rated the #1 lease accounting software by reviews by customers for the past 3 quarters. So we're really excited about that and continue to strive for that greatness, right? So that's a little bit about us. Now let's talk a little bit about lease accounting. Everyone's favorite topic, so I'm sure everyone's just on the edge of their seats, ready to go, and we're going to give you that excitement here and keep it going. But we'll talk a little bit about, again, just the background on lease accounting, how it came around, why is it happening. I think that's, so I often demo our software, and a common sentiment I always hear is, I don't know why they did this. Well, that's why we're here today, is to tell you why. And so let's talk a little bit about, why did the boards change these rules for lease accounting? So let's break it down really simple and think about, what's the difference between balance sheet and income statement, right? Balance sheet gives us that financial snapshot of a point in time. Okay, and again, we're just laying this base here so we understand that impact here, but that point in time, right? What you own, who you owe, and your value at the end of the year, right? That asset, liability, and equity. Your income statement, revenue and expenses, right? That financial performance over a period of time. How did we do this year? So how much money did you make, right? Probably the thing that everyone cares about. And so, understand that basis, right? Previously, our leases weren't showing up throughout our financials, right? We were just seeing those expenses. And so, they're a great example of how a company's impact wasn't shown across all of their financials is Delta, right? I think poor Delta, everyone always uses this as an example, and but it's just because it's such an easy one to understand, right? Take a company like Delta. So at any point in time, they had hundreds of millions, right? Because their sole operation is flying planes. Well, they had hundreds of millions in outstanding lease commitments, right? They lease these planes from your Boeings and from all the different airline producers, right? They lease those actual assets, and so they have hundreds of millions of commitments that they had to pay. But under this old standard, no one really knew, right? They didn't have to state that. Why would they if they didn't have to? But they owed all this money. These were true, real liabilities that they had. But they structured those contracts to make sure that they were operating, right? Because under the old standard, you had operating and capital leases. Those capital leases have always been on your balance sheet. But those operating leases, as it states, were just operating. So they're just operating fees, right? You just pay an operating expense and then just categorize it with just that operating expense. And so they were smart, they say, like I said, they don't want to show that because if they don't have to, because that is a huge, huge liability. So they didn't, they structured it that way. And so really the main piece there to think about is that there's no transparency, right? You couldn't see on their financials what was going on or, how they were being affected. But, jump back here. But so that really resulted in rating agencies, investment banks, your Bank of America, your Merrill Lynch, your Barclays, Citigroup, all these ones you see on the screen, where they're constantly evaluating your financial statements in order to determine, how willing they are to loan to you, right, to give you money. Well, they were actually reconstructing the actual profiles, right? So they were saying, well, I want to be able to include that because that's important for us to understand what that looks like. Are you guys still able to hear me?
I can hear you.
Okay, perfect.
I think we might have a screen freeze for a couple people.
Yeah, I'm frozen as well.
Okay. Let me see. Go back here.
Sorry, everyone. 1 second while we work to get, technology back on our side.
I just moved back to the Delta screen. Are we seeing that right now?
No.
We've got a black screen.
Oh, no. Let's see here.
Okay,
There you go.
I think we're good again.
Okay, I'm so sorry, everyone. Yeah, this technology is not on my side today. I apologize there. Okay, we will get back into the presentation here. So back on the transparency screen. Again, talking about how these financial agencies were reconstructing, the actual profiles of these leasing companies. So they did include that, right? Because again, those massive liabilities were important to them because that determined, whether they're going to lend to them or not. So they were creating that transparency themselves to understand what that liability looked like. Well, the big problem was that they're all doing it so differently, and there was really no consistency. So those two words are really the driving factor behind the boards creating these standards, right? Is consistency or uniformity, right? A uniform way, and to have transparency. And so that's where we came about, and the board started to create these standards to increase that transparency and really have that common ground. So they came out with ASC 842, IFRS 16, and GASB 87, again, in order to create that transparency and give the market, right, additional confidence. So that those financial institutions weren't going out and creating their own way, and then also to people investing were able to understand, what the true financial performance was there. So who's got to comply with these, right? ASC 842, hopefully that's the word that's been buzzing around that you've heard a lot. That's for public, private, and non-profits. So public companies that started back in 2019, right? 1/1/2019 was the first date of compliance because it was any year end ending after that 12/15 period. And now private companies is this year, right? We had an initial delay for private companies just because public companies went through this and reached out to the board and said, hey, this is difficult. This is a lot more work than we expected. This is something that really is going to be difficult for these private companies because these big public companies have a lot more resources and have a lot of more capabilities, and they were struggling with it. And so the board gave private companies an additional year to 2020. Obviously, everyone knows what happened in 2020, right? Craziness ensued, and they initiated that additional delay, right? So that now this year, everyone is ready to comply. And so any year end after 12/15 will require you to report under this new 842 standard that we're talking about today. And then obviously for your international companies and your governmental, you have IFRS 16 and GASB 87 respectively. So we're gonna pause here before we keep going, and we'll have Cordy open our first poll here. So we're gonna have some polls going throughout here, just asking you some initial questions. But the first question we want to ask before we get too deep into this compliance is how many leases? What does your portfolio look like right now? What kind of burden are you expecting there? So we'll leave this poll open here for a minute or so, just to give you some time to think through this and go ahead and answer.
Yes, so everyone should now see the poll up on their screen, and thank you for those who have already answered. We'll leave it open for a couple more seconds as those final questions come through. Okay, and if you haven't voted yet, now's your chance. We're going to close out the poll. Okay, so it seems like we don't have anyone with a crazy amount of leases, Wes, but it looks like we've got about 38% with 11 to 100 and, 63% with less than 10.
Okay, awesome. That's a good level. Yeah, I'm glad that no one's going to be too burdened here with a massive portfolio. So, but yeah, we definitely understand that. Honestly, even one lease, right? One lease can be difficult. So, I think today will be beneficial for everyone. So, I appreciate everyone, enacting with that poll. Also, to continue to feel free to pop in questions as we go throughout this. We will also have an open question, a Q&A here at the end if you'd like. But if you put those in the chat, we can stop and answer those during the polls if you'd like, or feel free to wait till the end and we can discuss through those. So we'll keep moving on here. So now we think about, when are we thinking about how to implement, right? The question is, should I use Excel, right? Does that make sense? Or, should I ditch that, right? Should I go into something more complex, right, to help this complex standard out? So when do you ditch that, right? Obviously, everyone knows Excel is awesome. It's a cheap tool and you can do so much with it. But it has its limitations, right? Excel can't provide guidance-based guardrails, right? So there's a lot of compliance things that you have to think about, especially around scoping, right? Example, short-term lease evaluation or lease type evaluation. We talked about the two lease types, operating versus capital. Right now, this new standard, it's operating and finance leases. Well, Excel can't help you determine what type of lease you have, right? Or again, whether you have a short-term or long-term lease. A tool can, especially like LeaseQuery, right? You'll be able to have those controls and that intelligence baked into the tool. They'll help, keep those guardrails up. I always like to use the example of a bowling alley, right? You gotta put those guardrails up so that we can keep the ball in the lane, right? That's what a tool can help you provide. Is just make sure you stay in the lane, make sure you're in compliance, and don't have any issues down the line. Also, too, a software can be really collaborative. Right, we talk so often that a lot of departments, it's decentralized, right? We want to have everything working efficiently as an organization, and then also too, something you think about is employee turnover, right? Someone's got this Excel sheet, and it's awesome, and it's great, and it works, awesome. But what happens when they leave, or what happens, if they're not in, and they take vacation during that year end? Is someone else an expert in that Excel sheet too, right? A tool can really just mitigate that risk there. And then also time, right? The most valuable thing in this world is time, right? Well, Excel can't automate those things, right? So having a tool to where you put a few key inputs in and it automates everything from you, right? And creating amortization schedules, giving you your journal entries, create all of your disclosures, right? There's a lot of changes in all three of those areas from the old standard to the new. And so a tool can really save you the time there. And again, that's the most valuable currency, I think. So aside from just kind of ditching this idea, what are some of those benefits, right? Well, control environment is a really key area, right? And sometimes, especially when we think about private organizations, not always audited on those control environments, but it's still really important to have, right? Separation of duties is a great one, always a very common one we think about. But if you have, again, that Excel sheet, right? Someone comes in there and deletes a lease or deletes a line or doesn't pull down that can't think of the word I'm here talking about, the formula, right? Doesn't pull that all the way down. Well, maybe if you have, or fat finger that, right? Put $1 million in for the payments instead of 10,000, right? When you have someone reviewing that, you can ensure that you have that accurate data to ensure that integrity throughout, right? Because these are going to have financial impacts now, especially on that balance sheet, right? So we want to make sure we have those separation of duties, and software can provide that for you. Not only can it have those controls, but it can track those controls and make sure they're appropriate, right? Make sure you're having an audit trail. So technology can really, document that workflow to ensure that you have an accurate and true control environment. And then also too, it's just going to centralize that data And then you can even segregate that access between departments so that you can still have an overall centralization, but specific areas of your company can focus on what they're concerned with. You know, real estate focusing on the buildings, right? Maybe you find a software where just a specific department can focus on their leases, IT can focus on theirs, right? But then accounting can see everything, so they have that centralization. You know, I know this is always specifically important for accountants, right? Because the age-old adage that accountants are typically always the last ones to hear about anything. And so when you can centralize that data so that all the departments can be involved, now accounting's on the front end and can understand, you know, what's going on with the portfolio and how it's going to affect the financials. So that control environment is really important here. And then again, like we talked about, it can improve that collaboration, improve communication, right? What's happening with this lease, right? Do we take this renewal option? Is that going to affect our financials? You know, when you think about those real estate leases, you know, did we pay our leases, right? Accounts payable involved? You know, IT, right? Do we have those servers that we're having to worry about? Are we adding new ones? Are we, you know, not using any ones? Are we taking them out of commission, right? That can all be so much more collaborative and really more efficient when you are in a tool, because everything's, again, centralized, the information and really the communication. Again, we talked about that separation of duties, having one person enter, another person approve, having someone notified, right? So that they're on top of those things. Just really, really important when you do have the separation of duties here. You can also have additional control over users, right? So maybe not just say, hey, everyone can have access to that Excel sheet. Well, I want everyone to have specific access, right? Real estate, I want you just to be able to view that information, right? You will put the leases in, you can view them, you can have that as a you know, central repository, you can run reports on those, but we'll take care of that. The auditors, right? I don't want you to touch anything, but I want you to be able to find some efficiencies so that an auditor can come in and do all of their procedures. You know, like I mentioned earlier, right? That's the experience I had. KPMG is I came in and someone gave me access to their system, to LeaseQuery at that time. I was able to come and perform all my year-end procedures without much back and forth between the client, right? So save them time because they're not, you know, answering questions from me or pulling information from me, and then save me time because I'm not having to do that as well. So, you know, we've seen reduced audit fees, reduced audit hours, just by having those efficiencies. So it can really help you out there by being able to limit that level of access. And then again, even by getting deeper and more specific based on your role, right? The department, the cost center, by entity, being able to see their specific leases here. Now, another area is critical date management, right? Software can help you out in critical date management. This is one that is often not thought about as an important thing on the front end, but when you start to really dive deep into this, it can be really, really critical, right? Is having a system that generates preventative controls to ensure, for example, you know, timely execution of renewal options, avoid unnecessary month-to-month, you know, fees, or, you know, appropriately reconciled CAM. You know, I hear horror story after horror story about this, you know, for just to give you an example, some insight to where this can really be beneficial. Think about, I had a customer who had a MSA, right, master service agreement for printers. Well, they were not happy with this company, and the printers weren't working well, and so they knew their lease was coming up here in a few months. So they went out, found a new group, signed a new master service agreement, got all of these printers in, and at the end of their lease for their old company, got another bill. And they're like, you know, what's going on? Where our lease ended. Well, they're like, were we not aware of the automatic renewal option in there? And they hadn't been tracking that, right? They didn't get any notifications around that. No one was on top of it. And so now they're sitting there with two groups of printers, and they'd only need one, right? And so they had to pay these huge termination fees because they had signed this new lease right at the beginning, and they wanted to get out because it was, you know, obviously double there. And so it cost them a lot of money just because they weren't tracking those critical dates, right? So not only can it save you time, right? Because you can reduce and have efficiencies, right? Have a system automatically do that. You don't have to go into, a calendar, right? Add those dates in, then add whoever's responsible, all that information, right? And then manage that on a monthly basis. The system can do that for you. So it saves you time. But then in certain cases, it can save you money. I had another customer who had a lease that expired, and they kept paying on it because they didn't know it expired. Right, the AP department, again, there's no communication there, right? The AP department was continuing to pay on it. Well, turns out that the company didn't, I think it was Wells Fargo, didn't even reimburse them, right? So they had those fees and they didn't tell them, and they didn't know that they were supposed to stop paying that, and then didn't even get reimbursed. So those are actually really critical pieces to track that. And again, a system can automate that for you. So these are some of the areas we think about can really benefit organizations. Now, before we talk about where not only can it help you out just your day-to-day, it can also help you out in your audit. But before we go to that, we're going to pause again, let everyone take a breath here. Cordy, if we can open up that next poll here, we'll go ahead and give you a second to answer this one. But just as we go through and as we have given you some insights here, we just want to know, what stage of lease implementation is your organization in?
Yes, and like Wes said, we have the second poll up, and thank you for those who have already responded. We'll leave it open for a little bit longer so everyone can kind of, think about this and get their response in. Okay, thank you to everyone who has responded. We are going to close this poll out. So it looks like we're a little bit more across the board here, Wes. So about 70%, are in early stages still.
Awesome.
And then we've got about 14% that are consolidating and collecting their lease accounting data. And then, 14% have completed their implementation. So,
awesome.
we're kind of at every stage.
Yeah, and that's really interesting, because that's what we see a lot, is that just everyone we talk to is just no one's in the same place, right? But if you've already got a software, awesome to you. If you're just at the beginning, you're obviously not alone, as you see a lot of people here. But yeah, and I would definitely kudos to the people collecting and consolidating that data. Really, as we've seen in practice, that often is the most time-consuming piece here, is just going through and gathering what leases you have and talking to the different departments and who are currently holding those leases, right? IT, legal, real estate, right? And just consolidating that information so you know what your true portfolio is. So definitely can be a very time-consuming thing. But hopefully after today, we get everyone out of that early stage of assessing, right? We get to start to evaluating. But I don't think we can do that until we really show you the benefits, and we'll continue in that by talking about how not only can it get to help you in your day-to-day, but can help you out in improved audit efficiencies. So when we think about what the real first change to the standard is that now all those operating leases, right, will have to be in compliance with how they're accounted for under 842. And in that, you got to create an amortization table. So here we just have a snippet of an example from LeaseQuery of what that amortization table might look like, right? Is setting up what your cash payments are over the course of that lease, right? Setting up, you'll see here at the top, right, where it says topic 842 amortization schedule with borrowing rate 3%, right? So now you have to identify a discount rate too to use for that lease, set up your cash payments, and then we'll start to build this amortization schedule out. So we'll understand what our liability is by present value in the future payments. And then we'll also have to understand what the reduction is. So you see that lease liability, and then you see the liability lease expense, which we're thinking about is the actual, more of like the interest. Now, under 842 for operating leases, we don't have interest and depreciation, but it's tracked similarly. because you're breaking out what that cash payment is. For example, on this first line, that $10,143, we're breaking that out between 3,000 of that is the reduction to the liability, and then that 6,700 is the quote unquote interest or the actual operating expense fee. So you have that first portion, right, with all of our liabilities. We break that out between short-term and long-term. Then you have your asset balance, which is created by taking your beginning liability plus or minus some different pieces, things like if you have a deferred rent already, or an incentive, or initial direct costs, right? Those things can affect your beginning asset balance. But if you don't have any of that, right, that beginning asset and liability will fall in line there. So you have that here, and then you have your asset lease expense. But if you see on the far right, the income statement piece, that total lease expense, that is your liability lease expense, so the second column there, and your asset lease expense combined together gives you your total lease expense. That's that same straight line operating expense we would have tracked under 840, right, the old standard. But now we have to break it out between a liability portion and an asset portion. And that's mainly for disclosure purposes. So on your GL, you're still going to be booking that operating expense. But in the notes disclosure, we have to have that breakout because there are specific disclosures around those. But this will gives you a little glimpse into what that automation will look like, right? Is that you put your key inputs in. What's the start date of your lease? What are the terms of your lease? What are the payments? Kind of rate? And then a system can automate and automatically create the schedule for you, rather than you having to go lease by lease and calculate all this information, right? A lot of risk that it's not done correctly, or a lot of risk that things change and we don't know how to account for them. Whereas again, that system can really help you out there. Also, again, a system can automate journal entries. So every month you're not having to go through and consolidate all of those different amortization schedules and identify what your monthly entry is. A system can give you those balances. Now, this is a really large entry because a lot of things going on in the portfolio that we took this from. But you see the first two lines, your cash, your expense, right? That activity for the month. In this instance, we have that incentive, right? Which is, again, is going to affect your beginning asset. We have deferred rent, prepaid rent. That is no longer tracked under 842, so it's going to be backed off of your books. That's why you see the deferred rent being debited, the prepaid being credited. It's going to be backed off of your books. And again, that is an adjustment into your asset. You'll see here, in this example, the system's automatically giving you your beginning asset balance as well as those beginning liability balances. And then there's some foreign currency translation. So again, a lot going on in this. This might not look like your initial entry, but these are all some of the potentials of what you might need to be accounting for, where a system can really create those efficiencies for you. Also, we talked about earlier, some controls that a system can put in place over a benefit of, say, of Excel, is helping you out with the classification. So under the new standard, there's a 5-part test to determine if you have an operating lease or a finance lease. So you'll see what those are, right? Ownership transfer at end of lease, right? Do you actually will you own that asset at the end of the lease? Is there a bargain purchase option, right? Can you purchase that for $1 at the end of the lease, right? Something like that. The lease term, right? So under the old standard, it was 75% of the remaining useful life as far as what the lease term goes. Now, it was a hard number, that bright line test under the old standard. You do have some flexibility under the new standard to determine your own percentages there. They don't use percentages, they use most of or significantly all for the fair value test, where it typically was 90%. The present value was 90% of the fair value, then it would be a finance lease. Now you have some flexibility on what percentages you would like to use. But either way, you'll always have to have some validation, right, around how you came to those determinations. You can't just say, hey, it's 10%, right? You have to have some validation there. But those are some of those tests, right? And then specialized use, that 5th test, is a new test under this new standard 842. If your asset is so specific of nature that the landlord, right, has no other use for that asset after the lease term, then it would be a finance lease, right? A great example is, say, like an ice cream truck, right? If you have a truck and they allow you to change it to make it an ice cream truck, right? You can't really use it for much else than an ice cream truck after, or a food truck, right? You're not going to use that for a delivery truck going forward. So that's where you'd see that specialized use come into play. But again, a system can automate that and give you those guidelines without you having to do significant work there. Also, having a document repository, right? We talked about centralization is a really big thing. Well, when you have a system, and this is a little snapshot from ours, you can store things like your documents, right? Your lease itself, amendments, pictures, whatever you want to store. You could have that all in one central place. So accounting can see that, real estate can see that, legal can see that, AP, right? Whoever needs to, as well as your auditors, if you give them that access, can come and see that too. So again, you're not in charge of pulling that information for them when they need that. So a document repository can be beneficial. A lease abstract as well. This is, again, an example of ours, where it will create an abstract. So it'll summarize all the information that you have in your lease into a nice PDF document. So this is something that, a lot of real estate teams really enjoy and benefit from having the tools. Hey, I can have a summarized quick look at everything going on my lease. I don't have to go through a system or run a report. I can just see all that information in a quick snapshot here. So that can be another benefit. And then an audit trail, right? Again, we talked about all of those controls that you can have in the system, making sure that things are being reviewed and approved. Well, you also want to have that tracked so the auditors can see what's going on, what's been happening with this lease. I see that it was initially 5 years, but now it's a 10-year lease. Oh, well, because we modified that, we had a renewal, right? Well, did that go through the proper process? Well, yeah, here's an audit trail of everything that's changed on that lease, when it was changed, who did it, and then who approved it. So you can have that historical insight into what's happened with that lease. Also, all of your audit reports. So under the new standard, there are a lot of new disclosures that are required. Well, a system especially like LeaseQuery, can have those automatically pre-built for you, right? I use this term all the time. I'm sure you're aware of it, the PBC list, right? Prepared by client list. A system can be that list for you without you having to do anything, right? So it just cuts down on that burden of you getting that list of, hey, here's all the things we need for the audit when we come in. Well, if it's anything related to lease, it's already in the system, check it off, right? You're done there. The system's created that list for you. So, everyone always asks though, well, what's the ROI, right? What's the benefit? How do I save money when I'm spending money on technology? And there's actually a lot of areas to save. And I think we've talked about some of those already. Those critical date management is a great example. So when you are tracking that in a central place and everyone's on top of it, you have those preventative controls in place to help ensure that we make the right decisions. We're not paying when we shouldn't be, or we know that we have that automatic renewal option, so we're taking the steps we need to terminate that lease before it takes that renewal option. Also, ensuring accuracy, right? Get those reminders, and then reminders to collect, security deposits, right? Maybe we forget that, or we don't get that money back, right? So there are a lot of financial incentives there, and then also one not even listed here, right? Saving time in the audit, right? How many times we have additional billing to the auditors because they're spending so much time, right? This is a new standard. This is going to be heavily scrutinized, right? So you're probably going to see increased audit fees around this standard. Well, if we have a tool that's automated, that has all the controls and the benefits in place that we've already talked about, right? You can have that benefit so that you don't see those increased fees, right? You get the auditors out the door quicker, and you can get back to your daily life. So these are really a lot of the benefits that you can see in a software. Now, I want to open up our last poll here, but before we do, again, we're happy to discuss questions that you have here. But again, we'll pause here, open up our last poll, and give you some time to answer that. But we just want to know, how do you currently plan to comply with the new lease accounting standards? Are you still, hey, I'm going to go manual, I'm going to stick with that, or purchase a third-party site, or other. Maybe you're getting the services of a firm, right? That's going to help you out and take that off your plate. But we really interested and love to know.
Thank you to everyone who has answered our final poll so far. Almost everyone has answered, so we'll give it a couple more seconds and then we're going to close this one out as well. Okay, well, so our final poll is a bit across the board again. So
Awesome.
we've got 75%, manually using their Excel spreadsheets, which I think everyone sees a lot. 13%, answered other, and then 13%, it doesn't apply to me. And I would think maybe those are those people that answered, they had finished implementation. So
Sure. Awesome. Well, we definitely appreciate everyone getting those polls in there. So a couple of things we'd like to do before we wrap up today. First of all, we have some time here. We would love to open up for questions. Courtney, I don't know if we can allow people to jump off mute or if they can take themselves off of mute. But if you'd like to jump in here and ask questions, we're happy to answer them. So I'll open up the floor to you guys and see if you have any questions here.
yes, if you have a question, please put it in the questions section of your GoToWebinar or enter it in the chat box and I can read it off for Wes.
Sure.
And I see we have a hand raised. So, due to that auto mute, if you can just type that into the questions section, we'll give you a second to write that out and then I can ask that of Wes for you and get you an answer.
Awesome. Appreciate you helping us out there, Courtney.
Yeah, and in the meantime, thank you guys so much for such an informative presentation. This is, new to me. It's exciting for me to hear about lease accounting. I think Chandler made a joke about that last time, that, who's excited for lease accounting. But, it's interesting to see, the tools that can solve, sort of these new requirements that everyone is facing.
Yeah, of course. And to that, while we let anyone get their questions in here, as a thank you to you for attending this webinar and with SWK, we would love to offer you a discount. So if you schedule a demo before, or I guess just request one before June 30th, we'll have you $500 off of implementation. Now, that's not a commitment to buy. It's just, hey, schedule a free demo. We'll talk to you. We'll walk you through the software, show you what it has to offer. You'll see a lot of the things that we talked about today. And then if you have any specific questions around your portfolio, we'll answer those as well. And then again, we'll give you that benefit here.
Yeah, please feel free to reach out to either your SWK rep or Wesley or myself, Chandler, with any questions, concerns, or interests. We are happy to help.
Awesome.
Hey, so we do have a couple questions that have come in. So our first question is going to be, at what number of leases do you find your solution is cost effective in general? So do you think there's a certain amount of leases someone needs to have, or what's your answer for that?
Yeah, it's a great question. So just as a mean of transparency, we have in our system people that have one lease. I think we have a few customers with one lease. We have customers all the way up to 10,000 or 20,000, I think. So it's a difficult question to answer directly, but I'd say the big four, and a lot of firms often say 10 leases or more, you should really start evaluating software. But again, if you're a short staff, right, you're the one-man show in the accounting department. A lot of times we see where that is a value is there, as well as I'd say too, if you have those complex leases, maybe someone has 100 leases, but they're 100 printer leases. They're very simple, right? Very, not difficult. But someone may have 5 leases that are really complex and a lot of things going on, right? CPI increases or whatever it may be, and that's where you can really find the value of the software. But again, also some of the ones we talked today. So probably not the most direct answer that you'd like to hear, but we're happy to talk to you. Like I said, if you want to schedule a demo, there's no commitment there, but we can talk through, you know, hey, we'll give you the pricing on that, talk to you about how it could benefit you. But I would say for sure, you know, we see Big Four putting out there that 10 or more, you should really start evaluating software.
Great, thank you.
Yeah.
And then we've got a couple questions, you know, about if the slide deck will be provided. So I just want to let everyone know that you will get a recording of the presentation tomorrow afternoon. And then as for the slide deck, you know, as soon as it comes in, I'm going to pop it into, you know, the handout section of your GoToWebinar. So you should be able to download that right now if you just bear with me for a minute or two. But I can also send it over, you know, directly through email if you'd like a copy of the slide deck. In additional, you can just reach out, you know, to, you know, respond to your email. And I'm going to put it actually in the attachments right now. And you'll, like I said, you'll get the recording tomorrow, and we can send you the slide deck directly if you would like a copy of the slide deck or you aren't able to download it now in your GoToWebinar. But I think, unless, you know, oh, we have one more question that just came in. So someone would like to know if you have many law firm clients that you do lease accounting for.
That's a great question. Yes, we do. We do have law firm. We are industry agnostic, so we don't have one specific industry. Pretty much any industry out there, we have customers in it. So yeah, we do see law firms in there for sure. Off the top of my head, I couldn't tell you how many we have, but we do have law firms as far as the client base goes. But really, there's no one industry that you know, we don't have, I guess you could say.
Okay, yeah. That's great. Yeah, you guys are kind of all across the board.
Yeah.
So, you know, unless we get, you know, another little last minute question, I think that concludes our Q&A for today. And, you know, I'd like to thank you both, Chandler and Wesley, for a really good and informative presentation. I know SWK is excited to be working with LeaseQuery now and kind of let everyone know what you guys do and how you can help eliminate these manual processes and make sure everyone is up to compliance. And so thank you for that great presentation. And I also want to thank the audience for joining us today. If you have any more questions, you want to hear more about LeaseQuery, reach out to your SWK rep. They will connect you with Wesley and Chandler, and we're always here to help. So thank you for taking time in a busy day to be with us, and we hope you have a wonderful rest of your day.
Yeah, thank you so much, everyone, for your time.
Yeah, awesome. Thank you all. Thanks, Courtney. Have a good one.
You too. Bye-bye.